I welcome you all my viewers. Today we're going to discuss gold and silver. To begin with gold, I'd like to start from the long-term view of gold, trying to understand where price is going in long term. And what is pretty much significant going into this week is trying to understand the movement of price on this strong bearish push. What might it mean? But using the Elliott wave, it becomes pretty much significant, and it is pretty much comprehensible when price move like this, talking of which price at the moment is in a corrective move. And when I see price doing like this, knowing that gold in long term is bullish, it tells me that the correction is not yet finished, and then it means I can still expect more of price to edge a bit lower before actually price can continue its rally. So what do I have on long term? On long term view, I have this push, which is wave 1, and then wave 2, and then inside I have a wave 1, 2, which indicates that price actually extending. And then if I have a 1, 2, then this is a wave 3, which is followed by a wave 4. Using the Elliott wave principle, it is pretty much simple because I can be able to estimate using the Fibonacci levels, or to assume where price might finish correcting, or where price might find support going up. So if I know this is a wave 1, 2 inside of a bigger wave 1, 2, then I can measure the retracement, assuming where price might find support going up. So I can now bring up my Fibonacci levels. Let me use the 61.82. So I can assume that okay, it's okay, price might have failed to find support here, and then it broke past the 38.2 level, which should be the first one, and then I can now assume that okay, maybe price is trying to test the 50% or the 61.8 level before going up. It is possible though, except that price, it mustn't break past at this point where it invalidates. So if price breaks and then goes beyond this level, below this level, then I can say okay, my bullish move is being invalidated here. So like I said in the beginning of the video, I'm going to focus on this push and how significant it will be going forward. Okay, let's dive down to the 8-hour time frame. I wanna label everything layer by layer, so if you can bear with me right now with my structure here. Let me remove this one and then remove this one again. So concluding that the correction might still be in form where we're targeting the 50% level or the 61.8 level, keeping in mind that price mustn't break the price territory of wave 1 as per rules of the Elliott wave principle. I can see that this looks like a choppy A, B, and that this might be the wave C, which is always impulsive, and then another A, B, C. So this structure might be a complex structure, which I can confidently label it as a WXY correction of a waveform WXY. Those who are familiar with the Elliott wave, they know that the wave W is being formed by ABC, and then wave X ABC, and then likewise to wave Y. I can expect a ABC move. So expecting an ABC move here, then I can say, okay, this is wave A, B, and then wave C, which is, let me label it the wave X, which is wave A, B, C. Wave A, B, C. For wave A, B, C, but at this time of a different degree. Let me use this one, and then let me change the color because it is of a different degree. So, and then I know that wave C always is motive. So if wave C is always motive, I should be able to see at least a 1, 2, 3, 4, 5 internal structure. Let me label it to be visible so that we cannot lose track of it. 1, 2, 3, 4. When it comes to the likes of gold and silver, most of the time the wave 5 extends as a, okay, let me change this one into minuscule, which is the same degree as the formation of AB, for the ABC, the internal count of A, B, and C, they should be of the same degree. And then coming back to this one, to the main focus of the day, my main focus is actually this drop here. This drop is impulsive, which indicates that, okay, right now we are experiencing a change in trend. The short-term trend, as for this correction, it was up. When we see an impulse waves usually they move to the direction of the main trend, unless it is the final leg of the correction, which is wave C, which is always motive. But at this instance, we see price switch drastically down, which tells us that, okay, right now we're experiencing a change in trend, and this is what I like about trading, just to wait for price to show me, to give me the way where actually does it wanna go. So for now, I can assume that wave Y is going to unfold as a zigzag. Why? Because a zigzag, it's an ABC correction where wave A and C is corrected by it's been connected by a B wave. So in this fashion where I see the wave A forming as an impulse, then automatically I know that, okay, the final leg, it has to be motive, and this tells me that, okay, a zigzag is in form, rather than seeing a three-wave shaped wave A, which will tell me that, okay, maybe a different type of correction is forming, because it is pretty significant to know that which type of correction move are we experiencing. If it is a flat, because the way you enter a trade, it has to differ based on what price structure are you observing right now. So as I see right now, I see price pushing like a 5-wave move, which might be wave 1, 2, wave 3, then wave 4 to come, and then wave 5. And so if this is 1, okay, didn't select that one. Okay, if this is 1, 2, and then if this is 3, 4, 5, we can actually validate if this might be 3, or we are yet going to see a fully formed wave 3. So I can project using the 2.618 or the 2.272. So seeing price rejecting at these areas, it got me assuming that, okay, this might be a wave 3, and then you might see a wave 4, wave 5, before actually price can correct and then continue going down. So with that being said, let's assume this is a wave 3, and then we are yet to see a wave 4 and then a drop of wave 5 before we can actually see a correction which will see price dropping even lower. Okay. So if this is like this, then I can assume that, okay, I can project for wave 4, assume where wave 4 may end, first target being 38.2, second target being 50%, then hoping that price might find a resistance here, being choppy, find resistance here, and then come to finish with 5. It might not necessarily happen like this. It might be price again, just seeing price drop from these areas, around these areas, because also the 23.4 level is also a valid level for wave 4 retracement. The 22.6, it's also a valid level. We can also from here see price dropping down to form a wave 5, but at this moment I'd like to give it the benefit of the doubt, because we know that the correction, it has to be a 3 wave. So I also want to see 3 wave moves before I can judge it and say, okay, finally we have seen the completion of this correction. But as for now, I'll just say I'm expecting price to at least edge lower before I can say, okay, I can swing short, But as for now, I'm just gonna be active on the market and see how price reacts from here, because I like to see a price reacting at these particular levels. Stand back, see price, how does it react, and then try to take advantage of it. So going to this week, all my eyes or all my focus will be on shorting gold. So yeah, that's it for gold. Let's jump into silver. Give me a moment so I can try to jump into silver. Okay. Silver. Silver is nothing much different, but when it comes to silver, I'd like to focus much on this correction, because it is pretty much straightforward for short-term trading. I'd like to focus on this correction. So on this part again, price is clearly choppy, which shows that, okay, this might be wave A and then this might be wave B, and we should have been seeing a wave C move, and clearly this formation of price, it doesn't signals that this might be a wave C. So I'd assume again a complex wave, or rather a complex correction is in form. So if a complex correction is in form, what do I have to take from it? Regardless of what is happening now, I know that if this correction is to continue, if this is an X wave, not a wave 1 or impulse wave, if this is still corrective, then I expect at least price to clear this level. I expect something like ABC, and then to clear at least these lows before I can expect silver to go up. So labeling this one, I assume this is wave A, this is wave A, B, C, wave A, B, C, wave A, B, C, and then I assume again we are going to see another. Okay, let me say this is wave ABC, wave ABC of what? Wave ABC of A, B, C. This one clearly looks impulsive, so I'm going to change the degree. Let's go change it to minor. And then change the color because we're changing the degree. Let's go to, okay, yeah, it's good. With ABC of ABC, and then this is ABC of a wave W, then X, and then Y. So again, with X is going, it's formed by wave A, B, C. Again, with X, it can be a complex correction, which is maybe it can be labeled as WXY, ABC, X, ABC, which is pretty much reasonable. So again, we can just give it the benefit of the doubt. As you can see, price has already reacted on that structural formation. So to label this whole corrective move as a complex corrective move, you can label this one as wave W, complex wave, X, and then Y. Wave Y. So wave Y again is going to be formed by a through wave ABC move. It can be again a complex move. It doesn't have to be always like an ABC move. It can be again a WXY move, which connects two different corrective structures. So with this being said, we can assume that this is a wave A of a ABC. So of this degree, I'm trying to, let me try to get this data, trying to recall this data. Okay, this again can be a wave A, B, through wave ABC, A, B, and then impulse wave C, which shows a 1, 2, 3, 4, 5. So we can assume that, okay, wave A has finished forming. Now we must prepare for wave B to trade wave C, which wave C is always motive. And again, like I said, we can observe a complex correction in silver. So this is, let me recall this data. Okay, let me recall this one. Of the same degree, this is wave A, minor wave A, and we're expecting minor wave B to trade minor wave C. Okay, I like my back to many. Okay, so using the Elliott wave, we can position ourselves for the next drop. How we can project and compare the waves the retracement of A and B. So usually, if this is a flat, we can expect wave B to come around the 38.2 level, but minimum, let me say the 50% level. It can also come to 61.8. Again, it can come as a flat to maybe 78.6, and so on and so on. But it's the market, anything can happen. But my minimum target, I'll start observing any change in price at around these zones, because these ones are the common ones. So if price hits here, then I'll be preparing to short price from here, edging below this level. Then from there I can expect silver to continue its rally. So for now, this is the structure that I'm observing. I'm observing silver as a complex correction, waiting for UC to finish forming. So guys, that's it for me today. I hope you enjoy the content. If so, hit the subscribe button and like the video. You can also share it. I'll also share my link to those who wanna subscribe to one of my products, one of my packages, and then we can work together. I wish you good luck on this coming week, and God bless you.